Welcome to The Explainer. Today, we're diving into one of the most audacious corporate strategies you'll find in modern finance. We're talking about how a software company is completely rewriting the playbook to build a digital treasury that some believe could make it one of the largest companies on the entire planet.
Yeah, you are seeing that right. We're talking about tens of billions of dollars. MicroStrategy, a company that makes business intelligence software, has stacked up a Bitcoin treasury that is just staggering. And let's be clear, this isn't some small side bet. No, this is a complete pivot that has utterly dwarfed its original software business and has the whole financial world watching.
I mean, what a statement. That is an unbelievably ambitious vision, right? This belief, this conviction in Bitcoin as the ultimate asset for the long haul has fueled a really radical shift in their strategy. But it all hangs on one single critical thing, their ability to keep on buying more.
And that really is the multi-billion-dollar question, isn't it? To really get your head around their master plan for just continuously accumulating Bitcoin, we first have to look at the financial tool they started out with, a tool that was, both kind of brilliant and at the same time deeply flawed.
Okay, so let's get into this. MicroStrategy's first move was to use something called convertible bonds to raise cash. And look, it was a really clever way to get money in the door and fast. But it came with a pretty significant, kind of hidden cost.
On the surface, come on, raising billions of dollars in debt with a 0% interest rate? It sounds like an absolute genius move. It's basically free money. But the real price they paid wasn't in interest, it was in the type of investor it attracted. The very structure of these bonds, well, it brought the wrong crowd to the party.
And these are not your long-term believers who are in it for the company's mission. No way. These are really sophisticated traders who just thrive on wild price swings. They're constantly shorting the stock and trading the price differences between the bond and the actual stock. And all that activity creates just massive instability and a ton of downward pressure on the stock price.
So you can see the problem, right? The crucial point is, MicroStrategy needed a brand new way to raise money. A way that would basically kick out these volatility junkies and bring in stable, long-term partners. And this need, it led them to a major financial innovation.
So they introduced this new instrument, perpetual preferred stock. Just think of it like this. It's a loan that never has to be paid back. The company just pays a fixed dividend to whoever holds it, forever. This one simple change completely alters who they borrow from and, more importantly, why.
And this just brilliantly illustrates the simple but incredibly powerful loop they created. It's a machine. They issue this new stock, they raise cash from investors who are just looking for stable income, and then they immediately turn around and use that cash to buy more Bitcoin. It's a cycle that just keeps growing their treasury.
Now, what's really fascinating is how they actually structured these new tools. What you're looking at here is the capital stack, which is really just a fancy way of saying the order of who gets paid back first if the company goes belly up. The real innovation here is that they're using this stack, this seniority, as a form of collateral. At the very top, you have the most senior debt holders. They get paid first, which makes their investment super safe. As you go down the stack, the risk goes up, but so does the potential reward. This structure lets them create different products for different kinds of investors, and that was the key to their next big move.
And listen, this wasn't just some minor little tweak in their financing strategy. Oh no. This was a massive pivot designed to tap into a vastly larger ocean of money, a move that completely changes the scale of their ambition.
So, their old method, using those convertible bonds, that gave them access to a market of about $1 trillion, which, hey, that's a lot of money. But it's a very specialized pool, and it's filled with those volatility junkies we just talked about. But this new tool, this perpetual preferred stock, well, that unlocks the global fixed income market. Now we're talking about pension funds, insurance companies, huge retirement accounts, a pool of capital that is 300 times larger. It's a completely different league.
And that's exactly what this is. It's a perfect analogy. You can't go out and catch a blue whale with a fishing rod you'd use for a trout. This perpetual preferred stock, that was the right lure. It was designed specifically for a much, much larger, more cautious, and more stable kind of financial institution.
And this slide just breaks it down perfectly. The whole strategy at its core was to swap out those unstable traders for stable, long-term capital partners. They literally exchanged the volatility junkies who want to short the stock for yield seekers who just want to hold the investment for decades and collect a nice, steady dividend.
So what's really cool is that this whole sophisticated capital structure, it creates these very distinct and really powerful opportunities for all different types of investors. It basically allows anyone to get in on the strategy based on their own appetite for risk.
It's kind of like a choose-your-own-adventure for investors. If you want that high-octane, leveraged exposure to Bitcoin's potential rocket ship upside, you buy the common stock, MSTR. But if you just want stable, predictable income, the kind of thing that's perfect for a retirement account, then you can buy one of their preferred instruments.
And their ability to keep raising this capital, it's all backed by just immense financial strength. The best way to think about it is this. It's like someone with a $7 million investment portfolio walking into a bank and asking for a tiny $60,000 loan. I mean, even if that portfolio's value dropped by half, the loan is still incredibly safe. Any underwriter on the planet would approve that loan all day long.
But you know, this strategy is about so much more than just one company stacking up Bitcoin. It's really about a whole new playbook for corporate finance, one that could fundamentally change how companies survive and even thrive in a world that is just full of rapid disruption.
Just think about it for a second. When a typical company gets disrupted by, say, AI, its stock falls. And if it spent all its cash on stock buybacks and dividends, it has no balance sheet left to fall back on. It's basically dead in the water. But a company with a Bitcoin treasury, well, it still holds this massive liquid asset, which gives it the capital and the time to pivot, maybe acquire a competitor, or invent a whole new business. It's the ultimate defense against extinction.
What this model really does is challenge the conventional wisdom you always hear on Wall Street. You know, the focus on quarterly earnings and returning every last bit of cash to shareholders. Instead, it argues for building a fortified balance sheet with a superior store of value, prioritizing long-term resilience and options over those short-term gains.
And this playbook, it's catching on. 5 years ago, you had one company operating on a Bitcoin standard. Just one. Today, there are over 150. All competing for the same limited supply of coins. This proves this isn't some fringe idea anymore. It's a real trend.
So the playbook has been written. MicroStrategy has proven that a public company can successfully transform itself into a vehicle for acquiring and holding a new form of pristine collateral. And its success leaves us with this final, really provocative question, not just for investors, but for the entire corporate world.